Last week, we talked whole life insurance, taxes, loans, and the flexibility of those products. Today, we're doing IUL versus everything. We're just going to talk about IUL versus whole life, 401ks, IRAs, Roth IRAs, and direct investing. This is going to be a pro IUL podcast where we're just going to focus on why we would like IUL versus any of those other things. That doesn't mean that we don't advocate for putting money in any of those other things. There are situations for it. IUL is not the only place that one should put their money, but let's see how it stacks up so that you can get some good information on where the IUL might be positioned in an overall portfolio and specifically in relation to some of these other products that we're going to be talking about. This is the Life Insurance Financial Education Podcast. I'm your host, James Barber, your Oregon Cash Flow Pro.
And my name is Carlo Viqueira with NetWealth Finance.
Carlo, let's start with IUL versus whole life. Since we're coming off whole life last week, somebody listening to our podcast week after week, if that's you, I appreciate that. Be sure to hit that like button, subscribe, or leave us a 5-star review if you appreciate the content that we're bringing here. But Carlo, let's start with IUL versus whole life. Where do you put the IUL in relation to whole life inside of your portfolio?
So IUL for me is slightly higher risk and slightly higher potential reward. And that's why I position it sort of between what I would consider my secure, solid return whole life and the bigger return direct investments. I think IUL fits solidly in between those, and you could have some really strong years in an IUL that might even outperform some market investments, but you have that downside protection, so it is still a pretty safe asset overall.
And I think that's in general a good way to think about the IUL. I like whole life as a good solid base. If we're starting out, we're going to build a base that's guaranteed. It has a lot of guarantees inside of it. It's not going to have the flashy returns. We're never going to get a 20% return like we might get in an IUL in any given year. But we're just going to get solid base hits year after year after year inside of the whole life. That's good for a certain portion of our money, in my mind. But like most people, we like to hit more than home runs regularly. And that's kind of where I see the IUL. Well, we want to get just a little bit better returns, possibly even a lot better, but still have that downside protection. We don't want to lose money inside of these products, but we want to maintain the ability to get explosive growth in any particular year.
I completely agree. The IUL is certainly going to have higher potential returns, but that doesn't mean that it's not a good tool for IBC or the infinite banking concept. In reality, for me, one advantage that I have in my own IUL is a fixed borrowing cost. My IUL, I can pay 5% solidly for the rest of my life. That's in the contract. I have access to that. And I also have the option for more of like a wash loan at a lower rate. But that indexed loan at 5% is really solid because I know I won't impact the growth either way, and I can borrow at 5%. So I actually personally will first borrow from my IUL over my whole life policy because my whole life policy is not fixed, and currently it's a slightly higher rate than my IUL is.
There's definitely good reasons to own both when it comes to having flexibility to borrow from one or the other, depending on what might be a more advantageous interest rate environment. I like that point. I also like to see the IUL as, I mentioned the whole life as like a good savings alternative, but I like the IUL as a good retirement supplement, where we're looking to treat this thing like a retirement account, similar to the things we're going to be talking about in the next couple of segments, but we're going to treat it more like a retirement account and hope for the gains that we might expect with that as well. But because we have those better loan options and potential arbitrage, we should be able to draw more income from the IUL throughout retirement. So I position it that way in relation to the whole life as well.
Yes. So one of the things that really gives you that ability to have long, high income in an IUL is that potential arbitrage. It's not guaranteed, but that is a very powerful thing when you can continue to earn on funds that you might already have borrowed out that you're using for an income. And that can be powerful, although it's, again, not guaranteed, but it can be strong for that purpose.
So wrapping this up, IUL versus whole life, we expect a little bit better growth, even though we know it comes with a little less guarantees, but that downside is protected. Let's move on to IUL versus 401k or IRA, and we'll do this a little bit separately from the Roth IRA and a Roth 401k. So let's say IUL versus traditional 401k or a traditional IRA. What are you going to consider when you're looking at those two things?
The main consideration when comparing to traditional 401k and IRA is, do you have a tax liability right now that you want to reduce? And an IUL is not going to do that, but that's also, in my mind, a benefit in the sense that you can get tax-free access to the gains inside of an IUL. So that is where I like an IUL, and we don't have the penalties. So if we have a need to access funds before 59 and a half for whatever reason, in an IUL, we can access those through either withdrawal up to the basis or loan is our preferred way to get access to those funds when we want to access them in an IUL.
Yeah, that's a good way to look at it. When I look at IUL versus 401k or IRA in the traditional sense, it really comes down to tax savings. If I want to put money inside my 401k or IRA, it's hard to beat getting those tax savings right out of the gate. And then we'll kind of deal with those down the road. We're just going to delay those taxes for now because there could be a lot of powerful growth that happens and then opportunities for us to get it out of there and pay less taxes in certain circumstances. You never know when, though. So you might be tying up your money. And this is where the IUL really shines. It acts similar to a Roth when it comes to tax-deferred growth, and we access it tax-free, but we have access to these funds throughout our life. We don't have to wait till retirement. We don't have to pay penalties, and it can be a really good supplement or complement to your normal 401k or IRA investments. That money's going to be locked up. Quick personal story. When we had our third child, we had most of our savings. In fact, almost all of our savings was inside of our 401k because we were doing the thing that everybody says you should do, and that's contribute to your 401k. But we needed cash. We didn't have it available. And some 401ks, you can't access those without leaving your job. That was the situation for us. So my wife had to actually quit her job so that we could access her 401k, pay the penalties, pay the taxes, so that we could afford this third child that we had. So challenging situation, but had we properly prepared and supplemented our retirement savings with the IUL, we would have had access to funds that wouldn't have involved the taxes and the penalties. Could have saved us a bit of headache.
And another thing that I like to consider when comparing to really anything that's directly in the market, so this will apply to a couple of the other ones that we discuss here, but this concept of sequence of returns and the possibility of the market tanking when you need funds. So that's where an IUL can be really strong. If you maybe are at retirement age, even though you might not have penalties, but you want to start drawing, but it just so happens that there is a market tanking scenario. If you start drawing from that 401k, when that happens, you're going to need to adjust your 4% rule or whatever your safe withdrawal rate, whatever it is, you're going to want to adjust that in order for those funds to last. Or you could turn to your IUL in those scenarios, because your IUL, zero's your hero, you got that floor, you will be able to draw without a gigantic impact on your IUL. And that's, I think, a really powerful aspect of the IUL.
So you're talking about the IUL as a volatility buffer. And yeah, that works great in retirement to go along with the rest of your retirement efforts when we're trying to draw income in order to maximize and delay drawing from stocks or ETFs or things that have gone down in value drastically. You want to wait for those to come back IUL could be a good place to tap into those funds in the meantime. The other thing that I like with the IUL that we don't have with the 401k or the IRA, well, let me phrase that differently. The other thing about 401ks and IRAs is you're limited on how much money you can put into those, whereas we're not as limited inside of an IUL. We can have much, much higher limits inside of a product that acts very similar to a Roth. So I love that about it. If you're already maxing out your 401k or your traditional IRA and taking those tax advantages, and you still have after-tax dollars that you've got to figure out something to do with, IUL, great place to put those.
I completely agree. And the other factor being, since you never really completely lose access to these funds, I look at it as a way to significantly increase my savings rate, knowing that I can borrow if I need to do whatever financial needs I have in the near term. So I will default to saving more by virtue of having my IUL.
Okay, so let's slip in IUL versus Roth 401k and Roth IRA right here. How are you treating those?
I would say an IUL is very comparable if you're in the right product and are funding it at the right levels. An IUL can be very comparable to a Roth. The difference being, as you just mentioned, you have this very high limit. Now, I personally fund both Roth 401k and Roth IRA, so I'm not against Roth. Love my Roth. I think generally speaking, you're probably going to see slightly higher returns over the life of a Roth. I think that's pretty safe to say if you're investing well. Now, these are direct investments, so you can have some really bad circumstances, but if you're in solid, safe investments, I think that it might be slightly higher. So an IUL is very comparable, though, in terms of a given year, the IUL might outperform or have downside protection. So there's definitely times where an IUL is going to be better in a given year if the market's going down. So I think they're very comparable, and I think that an IUL is a really great supplement for a Roth as well, especially if you're hitting those limits.
Yeah, this is one of those situations where I don't view it as an either or. Like I don't really with any of these products that we're comparing, but we don't want to think of it as the IUL or those. It's the IUL and those that we really want to take advantage of. I'm a huge fan of the Roth. IRA, 401k, doesn't matter, but that's one of my favorite tools to use because potentially the growth is unlimited. You have more control over what you can invest in. That could be good or it could be bad, depending on what type of investor you are, but the potential is better and you can control if you're in low-cost funds or not. And so theoretically, you could manage it yourself and have much lower costs inside of the Roth. Once you die, if you haven't tapped into those funds, your beneficiary can get 10 more years of tax-free growth. We don't even get that in life insurance. Like when you die, it pays out. It pays out a tax-free death benefit, which is nice, but you don't get 10 more years of tax-free benefits. Now, the beneficiary they could decide to put it into something that continues to get them tax-free. But at the base level, the Roth gets us that extra 10 years. And so it's one of my number one assets to hold on to and to invest in. So I look at the IUL as complementary to that because it is very limited on how much we can get into those. And if you make a lot of money, you're definitely going to need more space for Roth type investments. And that's where I like the IUL. So wrapping up the IUL versus 401k or IRA or Roth 401k or Roth IRA, we like the IUL as a supplement to these things. It's complementary. We want to do this and that, certainly max out and get the tax savings that you can get with your pre-tax retirement accounts. Get those after-tax Roth funds in there because it's such an awesome vehicle. But then we look at funding the IUL in addition to that because as a complement to our actual investments in the stock market, we have that downside protection. You could have the S&P, you can have investments in the S&P directly invested in the market that in any given year, could go down 50%. But in the IUL, it held steady. And we can have S&P investments in the IUL as well. So that's one of the things I like to do with mine is I like to actually complement what I'm investing in the market with what's happening inside of my IULs so that I get that downside protection. Let's talk IUL versus direct investing now. This is the last topic of this episode. Direct investing means we're going to go directly to the stock market, or we're going to go directly to the real estate market. It could be anything, but basically you have direct investing. Most of the time it's going to be in some type of index fund or stock. How do you view these?
I would say that an IUL is where I'm going to park my money first. I'm looking to get those solid, safe returns in an IUL. In my own investments, since I have both IUL and whole life, I do feel like I can be a little bit more aggressive in my brokerage accounts, in my direct investments, because of my IUL. So comparing these things, it's really hard when I get into some of my normal brokerage accounts and what I might do with some of the things, the trades that I might execute. They almost become less comparable than what are the traditional retirement accounts. So I would say that in my regular brokerage, I have some long positions that I hold that might be long-term payouts. And I have to have more active thought about those things as well. So you have to tax strategize around any of these regular investments, whether it's in the stock market or in real estate. So there's a lot more complexity when it comes to, I know a lot of people will think IUL is very complex when comparing, especially to whole life. There's a lot of complexity in how you approach traditional market investments that are not in a Roth or a 401k. So I would say that an IUL is a bit simpler.
Agreed on all of those fronts. I think direct investing, it does give us full participation in the market, potentially at lower costs, although there are high cost investment options out there. And you could spend a lot of money having other people manage your money in the market themselves. With a proper design, IUL can be a really, really low expense option that does offer some downside protection. I like to see it again as a complement to doing some types of direct investing. There are actually really good tax advantages when you're just investing directly in the market. You're not necessarily going to be able to access those funds without incurring some type of tax, long-term capital gains tax, sometimes short-term capital gains tax. You might have to pay taxes on dividends that you're receiving. But if you just buy and hold, when you pass away, the value of those step up in basis and they pass on tax-free to your beneficiaries. There are advantages to donating to charities by giving away stock. So there's a lot of good reasons to actually invest in the stock market beyond just potentially unlimited gains in particular stocks. In the IULs, you can't invest in any individual stocks. You're not even invested in the market itself. You're just going to be indexed to some type of fund, and your growth is going to be based on that. So there's definitely some differences when it comes to what we expect to get from the IUL compared to what we have access to with any type of direct investing. How do those compare to each other? And how can we set those up so they complement each other? That's what I like to look at. And I definitely think that there's a place for the IUL in anybody's portfolio.
I agree. And circle back a little bit to something you said earlier about kind of comparing to maybe managed funds. If you're paying some kind of assets under management fee to a financial advisor, really, I like to consider what my IUL is sort of like that. I mean, some of these IUL carriers, my own IUL, they have their own trading desk and they have these funds that they have, and I am paying a fee is how I look at it. The cost of insurance does come with value. The other costs that are in an IUL, there's value attached to those things. But if I like to think about it in a way, I actually don't pay any professional management of my own stock portfolios or my retirement accounts other than, the regular fees to like Vanguard. But my IUL is sort of that. It's managed. It's simple. I'm not doing much with it. And I actually really like also what you were saying around tax strategies. There are things and considerations you can have, maybe tax loss harvesting with your brokerage. You can, one thing that I employ in some of my regular brokerage accounts is dividend strategies like qualified dividends or special treatment. I think we've talked about, in previous episodes around some special treatment of different dividends. So there's a lot of great tools you can have in a brokerage. And I don't think, I think actually everything we've talked about, both James and I have, I think, various funds in all of these things. So it's not like we don't like them. It's just, I think every one of these things has a place in various people's portfolios.
Yeah, I've got money in every single one of the things that we're talking about right now. So I'm a big fan of basically all of it. It's just a matter of figuring out how to do it in a way that matches your risk tolerance and hopefully furthers your financial success and gets us to that financial freedom. Not all of the things are quite as easy because they're not downside protected as whole life or IUL. Having that downside protection really frees me up personally to be able to do other things with my other investing. And I just don't have to worry when the market's down. If I have a lot of money in my whole life and my IULs, which I do, I can still sleep peacefully at night when the market's crashing because I've got plenty of downside protection.
Yeah, I think that's one of the main things. That's the story of this episode, is that downside protection with that market-like potential is the real power of the IUL. And I think it is a really good asset to have in order to kind of have a bit of the best of both worlds, in my mind.
I think that wraps it up pretty good for this topic. Do you have a call to action for our listeners this week? It's time for this week's call to action.
I think to tie it to this episode, people should assess whether or not they have things in their portfolio that have that downside protection. And maybe there's not too many other things in the world like whole life or IUL, but assessing whether or not you have some portion and what percentage of that is in your portfolio right now. If it's zero, get in touch with one of us.
That's a great suggestion. I will echo that with my call to action. I think people should evaluate their overall financial portfolio and identify where do you have your funds? Are you properly preparing for estate tax planning? Are you preparing for retirement? Do you have that volatility buffer when it comes to retirement if the market were to crash? If the answer is no, definitely get in touch with one of us. We would love to take a look at your overall portfolio and see how we can improve it, make it safer, and ultimately have a higher likelihood of success throughout retirement. Next week, we're going to be talking about recurring concerns that show up on Reddit regarding high cash value life insurance. So be sure to check that out next week. With that, I'm James Barber, your Oregon Cash Flow Pro. I'm licensed for life insurance and annuities across the country.
And I'm Carlo Viqueira. You can find me at netwealthfinance.com or on YouTube at netwealthfinance. And we'll work with life insurance customers across the country as well.
Take care.
Yeah, thanks for watching.
The next 20 seconds determine your future. Subscribe, meet with us, or continue educating yourself with these videos right over here.